Welcome to Unlocking Financial Insights, Navigating the Income Statement. In this video, we'll unravel the financial story told by the income statement, empowering you with the knowledge to make informed decisions on your financial journey. Let's dive into the world of numbers and discover the valuable insights that can shape your financial success. This lesson will include the following topics. 1. What is income statement? 2. Operating revenues. 3. Gains. 4. Primary activity or operating expenses. 5. Losses as expenses. 6. Usage of income statement internal. 7. Usage of income statement external. 8. Example of income statement. 9. Income statement, the bottom line. What is income statement? An income statement or profit and loss statement or statement of revenue and expense is one of the three important financial statements used for reporting a company's financial performance over a specific accounting period. The other two key statements are the balance sheet and the statement of cash flows. The income statement primarily focuses on the company's revenues and expenses during a particular period. Mathematically, the net income is calculated as follows. Net income equals total revenue plus gains,
minus
total expenses plus losses. Operating revenues. Revenue realized through primary activities is often referred to as operating revenue. For a company manufacturing a product, or for a wholesaler, distributor, or retailer involved in the business of selling that product, the revenue from primary activities refers to revenue achieved from the sale of the product. Similarly, for a company in the business of services, revenue from primary activities refers to the revenue or fees earned in exchange of offering these services. Non-operating revenues. Revenues realized through secondary, non-core business activities are often referred to as non-operating revenues. These revenues are generated from the interest earned on business capital deposited in the bank, rental income from business property, income from strategic partnerships like royalty payment receipts, or income from an advertisement display placed on business property. Gains. An excess of money or fair or book value of property received on sale or exchange of an asset is considered to be a gain. Like company sold its old transportation van, unused land, or a subsidiary company. A gain may also be recognized when any type of financial instrument is sold for more than its purchase price or book value. Primary activity or operating expenditure. All expenses incurred for earning the normal operating revenue linked to the primary activity of the business are called primary activity expenses. They include the cost of goods sold, COGS, selling, general and administrative expenses, SG&A, depreciation, amortization, installments of operational loans, research and development, R&D, expenses, employee wages, sales commissions, and expenses for utilities like electricity and transportation, etc. Non-operating expenditure. All expenses linked to non-core business activities, like interest paid on loan money, repair of the company apartment given on rent, expenditure incurred on advertisement display placed on business property, etc., are called the secondary activity expenses or non-operating expenses. Losses as expenses. All expenses that go towards a loss-making sale of long-term assets, sale of assets less than book value, one-time or any other unusual costs or expenses towards lawsuits, or selling the instruments less than its purchase/book value are called losses as expenses. Let's see what are the uses of income statement inside the organization. Though the main purpose of an income statement is to convey details of profitability and business activities of the company to the stakeholders, such statements are also prepared to gain deeper insights by the company management for checking the progress of various operations throughout the year, though such interim reports may remain internal to the company. Based on income statements, management can make decisions like expanding to new geographies, pushing sales, increasing production capacity, increased utilization, or outright sale of assets, or shutting down a department or product line. Now let's see what are the uses of income statement outside the organization. Competitors may also use them to gain insights about the success parameters of a company and focus areas as increasing R&D spending. Creditors may find limited use of income statements as they are more concerned about a company's future cash flows, instead of its past profitability. Research analysts use the income statement to compare year-on-year and quarter-on-quarter performance. One can infer whether a company's efforts in reducing the cost of sales helped it improve profits over time, or whether the management managed to keep a tab on operating expenses without compromising on profitability. Illustration of income statement. In an income statement we can write the name of the business on the top of the list, then name of the statement, that is income statement, then the period for which the statement is prepared. Then title of all income and expenditures accounts, on the leftmost column usually, and their respective account numbers in very next column. In next column the balances of all the expenditure are recorded in front of their respective heads of accounts. Then last columns is used to record the balances of all types of revenues and gains in front of their respective heads. Then, we make the total of both columns of revenues and expenditure as shown in the example. After that we calculate the difference between revenues and expenditures. If the revenues is more than the expenditures we record the difference as gross income. Or the loss if vice versa. Then we record the taxes paid or payable, and hence we get the net income after taxes that can be transferred to the retained earning account in the balance sheet. The bottom line of the income statement. An income statement provides valuable insights into various aspects of a business. It includes a company's operations, the efficiency of its management, the possible leaky areas that may be eroding profits, and whether the company is performing in line with industry peers. As we wrap up our deep dive into the income statement, you've gained a valuable perspective on financial storytelling. But the journey doesn't end here. Join us in the next video as we unravel the mysteries of the balance sheet. Get ready to explore the other side of the financial coin and enhance your financial literacy. Thank you for being part of this learning journey, and I look forward to having you with us in the upcoming exploration of the balance sheet.